sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comments section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's check out our open positions. First up here, we've got a T-bill auction that's happening tomorrow. USO, we've got a March expiration short put trying to get to 35. Right now, our bid is at 35, mark's at 37, ask at 39. So this one may fill any minute now during the show. Short call spread on EFA trying to get to 21. We're flat on this one. Short call spread for March on the semi ETF. This one's got a lot of work to do, but we still got some time, so no worries. And short call spread on XBI. We're in the middle, right in the middle of this spread right now. So it's start thinking about rolling it later this week or just having the close the position next Friday at expiration. We'll see. Haven't decided on this one yet. Okay. All right, let's look at some new positions to open. Let's start with Roblox this morning, RBLX. I think we'll do Roblox first, then Snapchat. Post-earnings move for Roblox here. Again, I know I sound like a broken record, but what we're looking for post-earnings are moves that are higher or bigger than that were priced into the options market. So say the move for Roblox was 8%, and it moved 12%. Now these options are still more expensive. We can still sell them, okay? But I don't know what the expected move was for this one, okay? So great reaction after earnings, up 12% today. Could be hitting resistance here. If not, next stop for resistance is, I don't know, 48.50, 49 or so. And then at 54. Okay, so let's look at the call side here. March expiration. You'd have to sell 52.5 and buy the 55. Let's do the math. The 52.5 strike is red today. So that means the movement wasn't as big as it needs to be, I'm guessing. All right, we'll take 66 minus 41 divided by 2 divided by 250. That's 5%. That's okay. It's not bad, but it is post-earnings, so volatility will lighten up. Put side, you'd want to sell the 40. And maybe buy the 35. Let's do the math. 55 minus 11 divided by 2 divided by 500, 4.4. So the put side, not that great. I think there's better opportunities. Let's look at Snapchat. SNAP. Down 32%. Earnings were yesterday after the close. Here's our chart. So it's dropping down. It's hitting the 200-day, so that's interesting. And it looks like it's getting support from back here in November of 23. Next stop for support is 1150 or so. And that's back in July of 23 and April of 23. Okay? But it could be getting a bounce here at the 200-day. Let's take a look. On the put side for March expiration, you'd have to sell the 10. You don't really get paid for it. You get 13 bucks. I think there are better opportunities out there than Snapchat. Even though it is down big, a lot of this was priced in. On the call side, you'd have to sell the 14 and buy the 15, and that's too tight. You're going to make $4 on it, okay? Moving on. Let's take a look at Ford. I'm not sure if this is an earnings move or announcement about their EV program. 6th after the close. So yeah, this was earnings. This was the 6th after the close yesterday. So this is post-earnings move, 3%. Not that big of a deal. Does look like volatility is creeping up here. Here's our chart. It's opened up above the 200-day and selling off. All right. All right, so let's look on the call side then. We may have missed the move on this one. You'd have to sell 14 and you get paid $6. So let's skip the call side. On the put side, you'd have to sell 11 and you don't get paid for it either. You get $8. A lot of open interest here. But again, you can see on both the call side it's red and on the put side it's red. That just means post earnings the move wasn't big enough, so they've lost value on both sides. So the call sellers won and the put sellers won on this one. Next up, let's look at Fox A. So the story on this one, this is earnings were today before the open, but they also announced between ESPN, Fox, and Warner Brothers that they're going to launch in the fall some sort of sports platform for $40 a month. All right, so that's why it includes Fox, includes ESPN from Disney, and it includes Warner Brothers. I think of the three, well, Disney has earnings today, so we don't want to mess with Disney today. And Warner Brothers is too small of a stock, so our best shot for setting something at the options market is Fox. So we're post earnings. Let's take a look. Believe it or not, they opened up higher and they sold off a lot. They moved from $33 all the way down to where they're currently at $30.30. So you want to sell the put side, I think, here. For March, you'd want to sell the 28. No volume here, though. That's our problem. Too illiquid, not enough volume. We can quickly look at WBD. That's Warner Brothers. They're down 4%, but same thing. Too small of a stock to make it worth it. And like I said, Disney has earnings after the close, so we'll follow up with Disney tomorrow, okay? Moving on, Baba, post-earnings, down 6%. I think they were up at the open, though. Selling off hard on this one. Volatility is pretty much average. We had a lot of positive news out of China yesterday. Never mind, they did open down and are still selling off. So let's look at the put side for Baba. March expiration. You'd have to sell the 65. It's fairly priced. There's no good deal here. Call side. I'd skip the call side. This 80 is too close to sell, and the 85 is too far out to make it worth it. Let's look at the 65 on the put side. 65 is right here. And I think 65 could be the next level for a bounce. So I would want to wait for the sell-off to continue down to around 65. And then sell the put side, okay? Hold on this one. Uber. Post earnings. Pretty much flat. So there'll probably be nothing to do here. Low volatility. Post earnings. Really high PE. Good looking chart though. If anything, it could use a good pullback. Call side, you'd have to sell 80 and buy 85. The 80 is a little too far out, so it's not worth it. Put side, see, you got red on both sides on this one too. So red on the call side, red on the put side. That's just post earnings premium being sucked out. Nothing left here to do. Let's pass. CVS, they're up. I wish CVS was down because then we could sell puts on CVS. I don't know if I want to sell a call spread on CVS. Volatility's okay. Yeah, gap up, had a big rally, It's already selling off. I wouldn't want to sell the call spread here, and I wouldn't want to sell the put side either. So let's just go ahead. Good liquidity here. Yeah, the put side, if you sold a 70, you only get paid 38 bucks. Not worth it. Call side, you'd have to sell 80. Skip this one. Okay, end phase. I've traded end phase before. It's a solar play. Here's the chart. You'd want to sell the call side on this. It may have a little bit more room to run over the next couple days here, up to say 130 or so. But selling the put side, no thank you. So let's take a look. Call side for March, you'd have to go out and sell the 145 and buy the 150. Let's do the math. Okay, end phase, selling 145, that's 178 minus 126 divided by 2 divided by 500, 5.2. That's okay. It's not bad. Usually when you trade end phase, you can get paid bigger. To be fair, the 145 is a little far out. You can go ahead and sell the 140. Liquidity's okay. 248, 262, 14-cent spread there. It's a little tight. No, it's not tight. That's what we're worried about. If you sold 140 and bought 145, let's do the math. 258 minus 183 divided by 2 divided by 500. That's a 7.5%. Granted, you are a little closer, and liquidity's not the best at the 140. Liquidity at the 145 is fine. Where's 140 on the chart? 140's up here. For March expiration, post-earnings, that seems fair. I doubt, even though there was a positive reaction on the stock, I doubt we're going to get upgrades on this one. Put side. You'd have to sell 95, and definitely do the spread here. Don't just sell puts on this one. Sell the 95, buy the 90. 110 minus 66 divided by 2 divided by 500, 4.4. Skip it, not worth it. Close, but no cigar. Next up will be VF Corp. VFC. Down 12%. Right away you can see on the put side, the spread at the 10 is 0.9. This will be hard to do. And the 12.5 is too close. Call side. Skip this one right away. Moving on. But VF Corp, this was post-earnings. Gilead. Post-earnings on Gilead, I believe. Yep, yesterday after the close. Today's the 7th, yeah. Wells maintains equal weight. Okay. RBC cuts the price target minimally, not much. Okay. What else do we got? Let's look at the chart here on the put side. Would think would make sense. This could have been the bottom this morning if it breaks down. We got support from back here in December of 21. Also a little bit more support back here in August of 21. So we could be getting some support here, but if it breaks down below that, we're going down to 70. And that's a far fall from here. Let's take a look on the put side. 70 is too close, and the 65 is too far out. We'll skip this one. Let's look at FTNT. Up 3%. I think this is earnings as well. Yeah, and they've already sold off quite a bit. Maintain a BMO. Market perform. Price target raised to 82. Neutral. Wedbush maintains. Not much of a move on this one. So gap up all the way up to 74, and it's already sold off a lot, so we may have missed the move on this one. Any update on the regional banks, KRE, NYCB? Sure, we'll get to that one in a second. Let's finish this one. So hit resistance from back here at the last earnings report and sold off. Let's maybe look at the put side. Actually, never mind. So you see we got red on the put side, red on the call side. Put side, you have to sell 60 and you don't get paid for it. Call side, you'd have to go all the way out to 80 and same thing, you don't get paid for it. All right, let's move on. So update on regional. So let's do NYCB first. We've been following that one. Didn't look at it yesterday. I think they got some downgrades at Moody's today. Looks like they were halted earlier in the session. Okay, we'll take a look at that one. Circuit breaker to the downside. Yeah, so there was a halt this morning. Downgrades from Moody's to junk. That makes sense. Okay, so yeah, we all know this thing's going bankrupt at this point, unless there's some bailout from JP Morgan or something like that. I doubt they'll get it. I don't know. But let's see how long the halt was for today. They're trading now, so opened up today 9:30, sell off. They got halted at right here at 9:52. So they were halted for 5 minutes this morning. This one, not going to be much to do here, honestly. Put side, you'd have to sell the 2 and buy the 1. Or if you just want to sell the 2 straight out, you're risking $200, you'll probably lose, okay? You'll get paid $42. And if this thing goes bankrupt before March expiration, you'll lose $200. So that's, hold on, let's do the math. 42 divided by 2, 21 divided by 200. You're looking at a 10% return if you closed at the halfway point. So you're risking $200. If you want to hold it till expiration, you get $42. That's a 20% return or something like that, maybe more. But if you want to close it halfway and collect $21, you'll get 10% return. Just know the great risk that you're taking on that one. On the call side, a lot of movement at 6, which makes sense. You'd want to sell 6 and buy 7, or sell 6 and buy 8. And the risk to that one is someone taking it over, and it'll zoom up higher. Okay. Me personally, I don't want to mess with this one. But let's also look at the KRE, and let's look at the KRE, and then we'll go over USO being filled right now, okay? KRE, a lot happening all at once here. So KRE is down because of NYCB. We talked about maybe selling puts at 45. Yeah, 45. Got all the way down to 45.50. Not there yet. We'll also take a look at JP Morgan. KRE put side, you'd have to sell 41. There's some volatility priced into this. That makes sense. Sell 41 and buy 38. Or you can just sell the 41 straight out. Cash secured, $4,000 in your account. 48 minus 21 divided by 2 divided by 300. 4.5% on the put side. We do have more volatility than normal, and that's for obvious reasons. Call side, I don't know. Call side, you'd want to sell the 52, and it's not really worth it. I'd skip the call side. So you get paid more on the put side. There is put skew on this one. 41. Where's 41 on the chart? 41's down here. We're close on this one. Put side, we're close. What would be interesting is if we had NYCB actually go under in the next couple days and this thing crash a little bit more and then go in and sell the puts. That would be the plan. Okay, Lacey? So there you go. That's the update on the regionals, KRE and NYCB. Hold up. Don't go in yet. Wait, so because there could be another bank announced as well that's connected to this one. Let's look at JP Morgan. They're down today, but marginally. They're not as effective as I thought they'd be. Let's look at Comerica, CMA. Same thing with them. Not as affected as much as I thought. Their earnings are coming up in April. Yeah. All right. Well, hold on the KRE. Let's look at our USO position that got filled. So, this one kind of lined up really nicely, okay? Back on the 2nd, this past Friday, we had oil down 3 days in a row. Percentage-wise, they were down a lot, so that was nice. We had this ascending trend line, so it most likely would have gotten a bounce. Obviously, I don't know for sure, but we got this nice trend line going up. So like I always say, we're trying to stack as many cards in our favor. Down 3 days in a row percentage-wise, ascending trend line, and we knew that the U.S. was going to have a response to Iran proxies in the Middle East. So all that lines up meaning oil going up, which it did. 1, 2, 3, for 3 days in a row. This is kind of the perfect setup. We got really lucky on this one, and not luck in the sense that it was a gamble, luck in the sense that we had everything lined up in our favor. Okay? I mean, this could have been up last Friday. Selling the put side would have been a lot more difficult, So we sold the 60 for March expiration. The 60 is all the way down here, so once you have higher volatility, your strikes spread out on both the call and the put side. We sold the 60, March expiration made $35, okay? So there you go. In and out in a couple days. Now at this point, no new position to take. It's hanging out in no man's land. It's approaching the 200-day again. It's just hanging out here around the 200-day moving average. So if things in the Middle East keep going sour, this can continue its move up. But also we are expecting recession soon. And global oil demand goes down during recessions. So that's why it's just hanging out here going sideways since 2022. We have all these factors in play. Factors to the upside and factors to the downside. You just kind of got to catch your luck when you can. We caught some luck on Friday. Cool. All right. Where are we at next? Boeing, BA. I think there was news on Boeing this morning. Up 1% today. They had the part of the report come out last night about the missing bolts in their door. They were just missing altogether. That's no good. Earnings aren't until May. Still show some heightened volatility. IV rank of 9. I think at this point, most of this bad news is priced in. I mean, they know about the newer models having problems. They know about the ones that are already in operation having problems. Investigation's already underway. We do have upward momentum since the bottom of the pandemic. And Boeing is also a wartime play because they make planes for the government. Put side, fairly priced. You'd have to sell, if you like risk, sell the 195. If you're a little bit more conservative, sell the 190. I would sell the 190, buy the 185. I don't know if I want to put 19 grand on the line here, and not as in we're going to lose 19 grand, but it's just a lot of capital. 140, Minus 93 divided by 2 divided by 500, 4.7 there. If you did the 195, 190 put spread, that's 210 minus 140 divided by 2 divided by 500. That's 7% there. And like I said, the 195 is a little close, but you're getting paid to take that risk. 195 on the chart is... that's awfully close. 195 is right here. That's way too close. Have to pass on this one. Because you do have some downside risk of different problems popping up. If the investigators find more problems that aren't known to the public right now, that's not priced into the stock, this thing will continue to move down. Okay? Balance your risk, balance your reward, okay? Risk management. Next up, Target TGT. Not earnings, but there was an announcement today of a possible membership program for Target. Up on the news, selling off slightly. We tried to sell the put side back in October. Nothing ever got filled. And they had a great report, and they've just had a great move up since then. That means earnings are coming up, though, yeah? The February 28th. So we're about 2-3 weeks out till their earnings. We're a little too close. We got an upgrade today to buy. Price target of 170. 170 seems a little... 170 seems okay. That's fine. Gordon Haskett. Good job. Too close to earnings to do anything on this one. Okay? So let's wait till after earnings. Maybe we'll have a bad earnings report. The stock will drop, and we can sell puts post-earnings. Okay? That's the plan. Next up, Yum China. Let's look at Yum first. I know they had earnings, but I don't think it's liquid enough. Yeah, too liquid. No volume. Your spreads are too wide. Let's look at Yum China. Also earnings today up 10%. But same issue, liquidity. They were up 14% at one point. Let's pass on this one, just because of liquidity. All right, following up, let's look at Tesla. I think they're up today. Waiting for them to fall to 165, right? Not there yet. I think there was news on Tesla this morning. Can't remember what it was. I don't know. Hold on this one. Let's move on. ARK, probably up today. Slightly. We're waiting for ARK to get to 41. Right now it's at 46. We're not even close. Let's move on. Alcoa. Waiting for Alcoa to get to 25. It's down today. We're close. Down big 2 days ago. Up slightly yesterday and down again today. If we can have one more sell-off day, maybe tomorrow or the next day. Sell puts on 25. We don't have earnings till April. April 17th, so that's a far ways out. KRE, we're on Intel. Is Intel down again today? No. We'll skip Intel. I think we may actually take Intel off the list. I thought it would move down faster, and it may be bottoming out here from support back at December. So we're going to take Intel off this list. We're not going to follow up with Intel anymore. Okay. Let's go to our IV rank scanner and see if it's working today. The rain in Southern California is gone. Thank God, everything's back to normal. Yesterday at my job, our Wi-Fi was down, TVs were down, everything was broken because everything floods here and nothing works when it floods. Sort by volume. NVIDIA on the 21st. BABA was this morning. The IWM, I think we were waiting for 210 on the IWM to short the call spread. Uber was this morning. NYCB's at 100% IV rank for obvious reasons, but The put side, I gotta sleep at night. $200 is a lot of money for some people. You don't want to just throw it away for no reason. And the phase we already looked at. The KRE we looked at. PayPal on. Oh, PayPal's today after the close. So we'll follow up with PayPal tomorrow morning. Hopefully we've got a good move. Disney as well. We have Disney after the close today. Same thing. Hopefully we have a big downside to Disney. We can sell the put side. Or a big upside on the call side. Sell the call side. KWeb. This is down today because of BABA. FXI. Soxel semis are up today. We're getting killed in SMH. Walgreens. It's probably because of CVS. Coinbase on the 15th. Lilly. Too big. AMC Rivian on the 21st. That one will be fun. Palo Alto on the 20th. Too close. CrowdStrike. March 5th. That's about a month away. They're probably up today because of FTNT. It's a $300 stock, so it's going to make it hard to sell. We can check it out, sure. CRWD. All right. Their earnings are March 5th, a month away. Some volatility, not much. IV rank of 55. We're about a month away till earnings, so it's going to start pricing in earnings volatility to the options prices. We have this big move to the upside, almost parabolic. If you zoom out, it almost looks parabolic, which means we need to have some pullback to make this sustainable. Call side, you'd have to sell the 370. Some volume here. Liquidity's okay. If you sold 370 and bought 390, that's a $2,000 spread. Let's do the math. Or if you want to keep it at 1,000, you can do that too. 535. Let's do the $1,000 spread. Minus 397 divided by 2. That's almost 7%. But do keep in mind, if you look here, you have some spike in volatility at the March 8th expiration and the March monthly expiration. Higher than normal just because we have earnings coming up in a month. So already they're pricing in some volatility in these expirations, okay? Higher than normal. You can make the case for some on the call side here. It's possible you could get in and out before earnings. We've done it before. But if you don't, you'll have to hold through earnings, and that's never fun. Next page. Shopify on the 13th. Good. Citigroup. Let's take a look at Citi. Get rid of this. Earnings aren't until April. A little bit of volatility. Would have wanted to sell the call side, but we missed it. Good liquidity here. Call side. The 57.5 is a little close. Put side. I'd skip the put side. Not worth it. Warner Brothers Discovery. With that, VF Corp already done. Marvell Paramount on the 28th. Boeing we already looked at. Snowflake on the 28th. We got 20 days till then. ARM today after the close. We'll follow up tomorrow. Let's take a look. Just curious what's being priced in for earnings. Here's our chart. You don't have a lot of history because this IPO'd back in September. We were following it back then. I know these are liquid, so that's good. On the put side, 10-cent spread here at the 57.50. That seems fair. Call side, you'd have to sell the 95. Same thing, liquidity's not bad. We got a 9-cent spread here. 8-cent spread here. It's not bad. Sorry, 10-cent spread. Interesting. We'll follow up tomorrow after earnings, okay? American, no thank you. Pfizer, no thank you. Avago, AI on the 28th. Upstart on the 13th. We'll follow up next week. XBI, right in the middle here. We're short the 85 and long the 90. So our 85 is in the money. Our 90's out of the money. If we can get a big sell-off in the next week or so, we may actually get saved on this one. If not, I have to start rolling again. It's annoying. JD, that's because of Baba. Chipotle, I think Chipotle had earnings today, but it's a $2,600 stock. The earnings are too much. Or sorry, the options are too much. Too liquid. Deutsche Bank, okay. At the money here, 30 cents for selling the 12. Interesting. Lucid is too small. Lyft is down. Earnings are coming up. Roku on the 15th. ARC we already looked at. Carvana on the 22nd. Oracle. January, February, March, mid-March, they should have earnings. I don't know why Oracle's on this list. Oh, RCL. Yeah, for some reason there's a spike at the March expiration. Interesting. Let's do some investigating here. Oh, we have earnings right here. A month away, exactly. And that affects March expiration the most. So, there you go. I don't want to do a trade with earnings expiration that week. Wells. Pass. Elf. I think Elf had earnings this morning. I think it's too illiquid. Flat, pretty much. Earnings were today, correct. Red on both sides. Too illiquid. 35-cent spread here at the 145. On the call side, 200, too illiquid, that's why. Skip. Target, we just checked out. KKR, we looked at that one yesterday. Pass on that one. Baidu, same thing, down because of Baba. Hertz, no. Walmart on the 20th. Square on the 22nd. Key is a bank. Solar Edge is up because of end phase, and their earnings are on the 20th. Costco, a month away. Too big. Affirm on the 8th. So we'll get Affirm tomorrow after the close. Hang on tight for that one. Oxy, no. First Solar is up because of end phase as well. Gilead, we already looked at them. Arbor Realty. Hold up. Pass here. GameStop, no thank you. Spirit Airlines, are they still a company? Their earnings are tomorrow before they open. We'll see if they are still in business tomorrow morning. Robinhood, that's a joke by the way. They'll still be in business tomorrow. Nova, Pinterest on the 8th. Silver, no. Energy Transfer Partners. Barrick Gold coming up on the 14th. I like Newmont better. Let's take a look at WAL. That's a regional bank. Earnings for them are April 16th. So, we've got 2 months till then. No news specifically. They're just getting hung out to dry because of New York City Bank. Here's our chart. It kind of looks the same as the other banks and the KRE. This one could get a bounce around anywhere from 53.50 all the way down to 50, and the 200-day moving average down here around 48. So there's your pit stops down the way. First one isn't though till 53. On the put side, you'd have to sell the 45. Liquidities, you got the most volume at the 45, and that makes sense. You get paid $107 for selling the 45. That's not bad. If you want to buy some coverage, you'd have to go out and buy the 40, but we got a 20-cent spread here. It's a little liquid. 35 contracts. People that are selling the put spread are selling the 45 and buying the 40. I get it. It makes sense. The numbers are perfect there. Again, we've got to wait for NYCB to go under. NYCB. You do have this ascending trend line. If you get rid of these extreme points here, you have an ascending trend line here, 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 and up to around 45 and change. It should get a bounce somewhere around this 50-ish, 48 to 50-ish range. Okay. Again, liquidity is a problem. This one was fun. I like that one. That's the end of page 3. It's almost 8 o'clock here on the West Coast. Maybe we'll call it. But a good one today. We had our USO short put fill. That's great. We had a bunch of trades close in the last week or so. A lot of quick in and outs. We're still getting dragged forward by the semi ETF and XBI. XBI, like I said, we sold the 85 and bought the 90. As you can see, for a couple months now, we've just hung out in the middle of our spread. We're waiting for it to move up and try to roll it, or move down and get out of it. I kind of like, it's a coin toss at this point, but it's exciting to see what will happen. Okay, that'll do it for today. Thank you so much for watching. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trading to tune in every day. Like, subscribe, all that good stuff. Hope you had fun. Good job on USO, and we'll see you all tomorrow.